iWIN TV. See what others can't.
Happy New Year. And welcome to the January 1st, 2018 edition of the Investment News Show. iWIN TV, where you win, because we use algorithms, not people, to select stocks and manage risks in the markets. We're the robots you can trust.
Why watch the talking heads on TV, who might have a hidden agenda, when algorithms have been shown to make better decisions?
Find out there
right now are the carrying
25% and gold is up 50%. It wouldn't be a total shock.
Get those old voices out of your head and start watching iWIN TV to get better results from your investments.
Today we're going to cover stock selection followed by risk in the equity and interest rate markets. Then we'll discuss the current state of cryptocurrencies and provide a special commentary on the 2018 forecast for equities. Past performance is not an indication of future performance. Please pause this video and read the disclaimer.
As you can see, there are currently 50 stocks in the portfolio with 86% winners and 14% losers. The average winning return is 37%, with the best stock Nvidia returning 593% since it came into the portfolio over 2 years ago. The average loss is 5%, with the worst stock, gaming company Electronic Arts, losing 12% since it was purchased about 4 months ago. In the past month, the natural selection algorithms bought and sold 6 stocks. They bought the Chinese internet information provider Baidu, the semiconductor equipment company Cree, the money center bank PNC, the asset management company T. Rowe Price, the social media company Twitter, and the drug delivery company Valiant Pharmaceuticals. The 6 companies sold were the healthcare plan provider Aetna, which was up 2% since coming into the portfolio 3 months ago; the metal fabrication company Allegheny Technologies, which was down 4% since it came into the portfolio 3 months ago; the healthcare information services company Cerner Corporation, which was flat since it was purchased 3 months ago; the application software company FireEye, which was down 2% since it came into the portfolio 3 months ago; the auto manufacturer Tesla, which was down 5% since it came into the portfolio 7 months ago; and the data storage device company Western Digital Corporation, which was a great performer with a return of 32% since it was purchased over 1 year ago. So now for a read of the equity markets. The risk in the equity markets has improved over the past month. The risk level of the Dow Jones Industrial Average is at very low risk, while the S&P 500 improved to very low risk. The risk level of both the Nasdaq 100 and Russell 2000 improved in the past few weeks to low risk.
And now let's talk about the current interest rate environment. Our measurement of interest rate risk remained at low risk this week. Interest rates seem to be moving in a small range with no firm direction. Your government treasury investments should be fine for now, but we are keeping average durations somewhat shorter at 7 to 10 years in case interest rates begin to increase. What about cryptocurrencies? As we discussed in our video published back in August 2017, there will be a shakeout coming in the very crowded cryptocurrency space. To date, Bitcoin has been the leader both in market capitalization and in brand recognition, but it is still plagued with problems, including a long transaction time of greater than 10 minutes per transaction, and a development community that is fragmented in their belief of the best path forward, as evidenced by the existence of Bitcoin and Bitcoin Cash. There are other attractive cryptocurrencies close on the heels of Bitcoin and Bitcoin Cash, such as Ethereum, Litecoin, and Ripple. It's very possible one of them might displace Bitcoin as the leader this coming year, but we'll have to wait and see what happens.
And now for our view of the 2018 equity forecasts you're sure to see, if you have not already. The talking heads and publishing houses are already discussing where they think equities will be headed in 2018. The reality is, no one can forecast the future of the economy or the equity markets. As an example, in 2006 the International Monetary Fund or IMF forecast economic growth of 4.6% for 2007 with an absolute worst-case growth of 2.5%. As you can see from the Reuters article published at the end of 2007, actual economic growth for the year was at 2.2% with an annualized rate of 0.6% during the last quarter of the year. This was less than the IMF's worst-case forecast and shows the folly in these types of attempted predictions. Don't listen to these people and organizations who are trying to appear smart when they forecast where equities or the economy might end up next year. These many failed documented and published forecasts from past history are the reason why we at iWIN TV give you a current read of the risks in the equity and interest rate markets, rather than trying to tell the future by forecasting where things might be headed.
Until next week, we'll be watching the markets for you to bring you the latest opportunities and risks. Please subscribe to get better results from your investments. Thank you for watching.
iWIN TV. See what others can't.